In the old days, it used to be a 250, 500 piece jigsaw puzzle, our life. Now it's 1,000 piece. It's got so many moving parts. There's so much confusion. There's so much high, low mentality and perception that anything can happen from one day to the next.
Antes de ver el vídeo al completo, recuerda darle a like, suscríbete a mi canal y déjame tu comentario.
Despite recession fears, do you see very good years ahead for new companies to list in the New York Stock Exchange in the long term?
For sure, in the long term, this remains the most unique marketplace where we have the most breadth and depth of investors and companies that are doing great things to change the world. We do think that in the long run, there is a very strong pipeline of companies that are ready to come to the New York Stock Exchange.
Focusing on the stock markets, S&P 500 has left the downtrend behind from the all-time hikes. Are you positive for the stock markets for the remainder of the year? What is your positioning?
Yes, I am. I'm actually yesterday, our investment policy notes indicated that we revised our 12-month target price for the S&P 500. It is now 48.20, implying a 10.2% rise off of yesterday's close. Now, that is a coming 12-month price performance, but we have reiterated our 45.75 target, which we established in December of last year. Reasons behind that decision are historically based. Whenever the S&P 500 did eclipse that 20% threshold above the prior bear market low, the market continued to advance on average by 5 months and on average gaining 14.5% before stumbling into a digestion or a correction of 10%. But typically 12 months after hitting that 20% threshold, the market was higher by about 20% in total. So chances are we are in a good period for the stock market. In terms of fundamentals, taking the target price differentials for all of the stocks in the S&P 500 by our analysts from a market cap weighted perspective, that too is looking for a low double-digit gain. And then lastly, from a technical perspective, looking at the chart projections for prices for the stocks in the S&P 500, we also estimate about a 10% gain. So history, fundamentals, and technicals seem to support being optimistic for the coming year.
It appears that banking crisis has further stoked the prospect of a recession in the United States. And in all my shows, I have commented that up to 7 leading indicators of economic recession have been triggered, from inverted yield curves to rising U.S. employment seasonality. Do you think that in Q2 or Q3 there may be direct signs of recession?
Yes, I think the risks of a recession have risen. And I think that banks are, as an intermediary to the real economy, if they come under increased pressure, be it from valuation of their securities, valuations of their other assets such as loans, and higher funding costs and more stringent regulatory environment, all of that combined, of course, makes them all else equal less likely to lend. So that does, all else equal, increase the chance of a slowdown in recession.
How do you see the situation of the markets and the economy with the possibility of recession just around the corner?
So I'm a firm believer that we're not going to see recession around the corner. It's possible. It's not where I want to go. I think that, look, markets love to analyze forward movement based on past performance. In the old days, you could see, I did our interview yesterday, and we found out that since 1954, 17 times, the market's first quarter market performance has been 7% or greater. Since 1954, that's what, 70 years. So over the past 70 years, the market's first quarter performance has been 7% or bigger 17 times. And 17 out of 17, 100% of the time, that has happened. The market closed up double digits for the year. Okay? So I think that, so markets love to use old past performance as a judgment of the future. For me, I think what happened during COVID with just the global interrelationships of our economies globally, around COVID, we never had a pandemic before. We never had countries and the world and the globe shut down, where for 2 years nobody got on planes, trains, on automobiles. Nobody went to a casino, got on a cruise ship. Nobody went to the movies. Nobody went to restaurants, right? Our world has changed forever. So, and I think that markets have changed forever. Economies have changed forever. So I don't think we can base, look, when they say we're going to be in a recession, they're making that inference due to past performance. In the past, when this happened, we had a recession.
Yeah.
Okay, I don't think that we can use in a market. So in the old days, a bull or bear market used to take 5 years, 10 years, 20 years to be in a bull or a bear market. In the last 6 months, we've been in a bull market at noon, and then by the close, we were in a bear market. So I think that we're in a new stage of economic mechanism. So I don't think we can judge the fact that we're in an inflation mode, we have raising interest rates, the labor market is like this. It's a puzzle, it's a formula that can create the recession. So I don't think we can make a judgment over past performance of the economic mechanism to predict a recession. We may have one. I don't know what next year is going to bring. I don't know what the next quarter is going to bring. I don't know what next Monday is going to bring. Anything can happen. A few weeks ago, could we have predicted we'd be in the midst of a banking crisis and 4 of the largest banks would have failed? No. Did we would have ever thought about all the things that have happened over the last 6 months? I think that we are in a world with social media, with the information highway, you know, with the way the banks are, with the way the markets are, with the way the global politics are. Would you have thought that 2 weeks ago the Saudi Arabians would cut oil production by 1.6 million barrels a day? No. 2 weeks ago, would you have thought that our frenemies, I call them, Saudi Arabia, Brazil, Russia, China, would get together, have a party, and not invite the United States to the party? I don't think so. Would you have thought that suddenly, 2 weeks ago, that suddenly the US dollar, which has been the currency globally used for all interaction, would suddenly no longer, from one day to the next, be off the charts? So I'm saying all this to say that we're living in a world of change. Change that used to take a month, a year, a generation to happen, can happen in 15 minutes. So for me to predict what's going to happen in the future is irresponsible. When people ask me, is the market going to go up or down? The answer is yes. Okay, and that's the best I can give you. That's a great answer. It's a responsible answer.
Yeah, sure. But related with what you said before, there are some kind of 5 or 7 leading indicators about recession: inverse yield curve, conference board, and other leading indicators that are point to a recession. How do you read that indicators? That leading indicators?
So I rate those indicators. So an inverse yield curve. In the past, a prolonged inverse yield curve have often pointed towards a recession. We have not had a prolonged yield curve. A year ago, the yield curve inverted for 10 minutes. And suddenly the media was talking we're having a recession. So I say this to say that we're in a bull market at lunch and a bear market at dinner. We are in an inverted yield curve at 12 o'clock, but at the coffee break at 1 o'clock, it's no longer inverted. So these indicators, we have not proven them to be long-standing indicators yet to prove that a recession is coming. They're very flighting. We're there for a minute, we're there for an hour, we're there for a day. And so in my opinion, these indicators can prognosticate the future when we're in them for a long time. But the media loves to be catastrophist, right? It's the biggest day ever, it's the worst day ever, we've never seen this thing up 6%, they've never had Saudi Arabia, you know what I'm saying?
Sure.
And look, I respect that's what their jobs are. But to be a catastrophist in a market where people react to your catastrophe, is a little bit irresponsible, because you talk about recession, then people start selling.
Yeah.
At the end of the day, that in fact was not a great idea. We have, Michael Burry. Michael Burry is one of the great short sellers of our time.
Yeah.
2 weeks ago, he told everyone, sell everything.
Yeah.
We're going in a recession.
And then he
3
said,
days ago,
we are wrong.
I changed my mind.
Yeah, I changed my mind.
Okay,
Yeah.
so this is a perfect example of where my prediction can give people some instinct about what's going to happen, and I never predict. Yes, the indicators are pointing towards a possible recession. Could that change like that? Absolutely. Do we know what's going to happen in the war in Ukraine? No. Do we know what's going to happen with the Saudis, the Russians, and the Chinese sort of attacking us in the financial markets? No. Do we know what's going to happen now that they have cut oil production? Is the price going to go back to 100? Is the U.S. going to release more reserves? Are we going to make a deal with Venezuela? No. Do we know what's going to happen with the dollar? No. Do we know what's going to happen with the recession, the inflation story? No. Do we know whether the Federal Reserve is going to keep raising interest rates? No. So I always call this is a jigsaw puzzle. In the old days, it used to be a 250, 500 piece jigsaw puzzle, our life. Now it's 1,000 piece. It's got so many moving parts. There's so much confusion. There's so much high, low mentality and perception that anything can happen from one day to the next.